look at financing now because, and this is kind of stating the obvious, but the North Atlantic financial crisis really did reshape how people get hold of money for their business needs. In short, regulators are exerting more pressure and putting tougher rules in place. Rules that mean banks must keep more cash in reserve to protect themselves from economic shocks. That, however, has meant less money being lent out to businesses, which in turn means less going into creating those much-needed jobs. So, is there another way? Of course there is. There's always an alternative, isn't there? In this case, it's actually called alternative finance. Our guest is the chairman and founder of one such financier, Dubai-based Falcon Group. It's Kamal Al-Zarqa who's joining us from London this week. Short story, first of all, Kamal. If someone met you and asked, what is it exactly you do? How would you explain that in the simplest terms? I just want to sort of, a précis of that for our viewers.
Well, Falcon is an alternative lender. We provide lending to corporates around the world and mainly on emergent markets and trade finance. We've been doing that for about 20 years and we are increasing our presence globally.
And again, and I'm just getting through the really simple stuff here. First of all, where do you get your money from? Just explain that for us.
Well, we raise money with on the markets like everybody else. We have bilateral lines with banks on capital markets, and there's a lot of institutional investors as well who are looking to put money to work, not going through the banking system, and they can funnel this money through us because of our expertise and because of our the balance sheet we have and the presence on the ground. And it's a win-win situation for the investors, for us, and for the corporate and the SMEs we deal with.
What I want to talk to you more about now is this idea, as you say, of alternative financing. The fact that since 2008, let's face it, people have found it a lot more difficult to get hold of money for their financial and their business needs. Now, I want to get some examples from you of what sort of business you've seen come through and how successful it's been.
Well, as I said, I mean, the alternative lending thing, we've been doing this for about 20 years. It's not something new for us. It's just becoming a much more fashionable industry in the last few years since the financial crisis. A lot of the banks have retreated, as we all know, and trade has continued to grow. I think it's reaching about $20 trillion this year, and this has created a vacuum in between for funding for corporates and for trade finance. And this has to be filled in a way, and alternative lending is a way of doing this. Some of the local regional banks are stepping up to the task, and they are filling part of that gap. But as I said, it's a $20 trillion market, and it has to come from somewhere. I'll just give you one number, which is very significant. In the US in 2013, 27% of the lending for SMEs came from alternative lender, from non-banking institution. It tells you that it's a very, very deep trend, and it's here to stay for a long time.
So tell me about then, and obviously I don't want to step on any sort of client confidentiality issues here, but give me an example, if you can, of someone who's come to you with something really interesting and you've thought, yeah, that sounds like a good idea. I want to help them out with that. You know, what sort of things do people come to you with?
If I had to give you a very, very simplistic example, it's banks mainly consider companies and SMEs and corporates based on their balance sheet, and typically clients will come to us because they're a smaller company or because they have their balance sheet that has been degraded because of the financial crisis. They've been through rough times, and they have a big book order. They have a buyer who's giving them a big order for, and it's a good buy usually, but they can't get the borrowing to get things going, to buy the raw materials, to process the goods, and to sell it to this buyer. And we would have a much more entrepreneurial approach to the transaction. We would consider the transaction on its own merits rather than on the balance sheet, the way that most of the banks will look at those transactions. And we will take comfort from the order we would have from a major buyer, and we will help the company to get their hands on the raw material, to process those goods, and to deliver those to the final client, which we will secure our payments from directly rather than them from the company itself.
Regulation is what I want to ask you about as well. How heavily regulated are you? Because obviously the banks are very heavily regulated. You know, they have to have X amount in reserve in case things go wrong, as they did. How does it work for you, though? Are you regulated to that extent? What happens if you get in trouble? You're almost a middleman here.
we're not the middleman because we are using our own balance sheet and we have quite a significant equity in the business that's over $150 million today. So we do have a lot of skin in the game if and when things do go wrong. And when it comes to regulation, our activity is a not regulated activity for the time being because we're mainly buying and selling and providing credit terms to our clients. But we chose to get regulated in Dubai, in the DIFC by the DFSA, Dubai Financial Service Authority, even though we didn't have to. We've been bracing ourselves in the last few years for regulation to come, and I think it's not about a matter of if, it's about a matter of when the regulation will come. So we just took a preemptive step to get ourselves regulated because eventually we think the regulation will come to the sector.
Kamal Al-Zarqa is talking alternative finance with us on Counting the Cost Rate. Great talking to you, Kamal. Thank you. Now,